Hello everybody, and thank you for coming to visit the channel. Before we start, please note this is not investment advice, it's purely for educational purposes, and please do take it as your own research whenever you are considering making your own investments or trade ideas. So today we're looking at a stock that has been on my watch list for a while. It's called On Holding. It's a shoe manufacturer that went public about a couple of years ago. And as you can see, there was a lot of excitement around the IPO. Things aren't going well. And then slowly we entered into a bear market and the stock has recovered ever since, all the way till things started really well, as we can see here in 2023. But then things started going a little bit sideways. So we had very positive earnings, it seems. We have a gap up movement here and some negative momentum here with a recovery over the summer and another gap down. So what's happened? Let's take a look at the earnings. So, right, we can have a look here. They missed earnings by 37%. Well, that's bad. The stock didn't move much though. They didn't seem to care. Maybe because it had been quite beaten down already. This is late 2022, so the market was generally up in that time. Similar kind of thing here. Surprise of minus 65%, and the stock went up. Quite unusual, but it happens sometimes. Okay, and here we get the other way around. Positive surprise, but the stock went down. And next, negative surprise and stock went down as well. So I had a look at this, and the most important thing to look at is the last earnings report. So they essentially were expecting to bring 13 cents, and they generated 5. So they missed quite a bit. They missed by 7 cents, more or less. Yep. Despite beating on sales. So that's why the stock fell. So there were two reasons for that. Part of the problem was that the strong Swiss franc, back then at 114, was a currency headwind for the company. But now that has turned to 1.11. So even though over the summer, so the announcement was done here, right, where you see this line. If we take a look at futures, so let's say that it's around here, mid-August, you can see how Swiss franc was around the 114 level, but it's gone down quite a bit since then, just to bolster a little bit the price right before earnings. So that's not too bad now. It's definitely in a much better spot compared to where we came from. So that's a good thing. The other thing that was a drag for the earnings was that they were seeing some cautiousness in the consumers, more so on the European consumer than in the US. So that's a good thing actually, because if you have a strong currency in the US, which they do now, because the US franc's been going down, the franc's been going down, that is a double whammy for them. So we should take that as a positive. Now, Nike beat earnings on the 20th of September. That is somewhere around here. So let's switch that over, 28. So yeah, you can see how the stock went quickly from around maybe the 26, 27, almost to the 29th mark. But again, we were in amidst market sell-off. So it continued going back down to around 23. And Over the last few days as well, we had an investor day, which was well received, and the stock also rose 7%. This must have been probably around here where we saw that rise. And unfortunately for them, after that rise, the stock ended up going down again. It's quite interesting move. But more importantly, what did they promise and what did they announce in this investor day? Well, um, at the investor day, the company affirmed their full year guidance and ambitious growth targets. So they expect to take net sales from 1.76 billion Swiss francs this year to 3.55 billion in 2026. So that's about, doubling those revenues. And they're going to do that through two different ways. One is higher direct to consumer, which has better margins, and also higher apparel growth. Now that's a good thing because when you look at the revenue, the profit that this segment brings, the gross profit margin of apparel is 59.6%, right? And that compares to footwear at 48.9. Now, footwear as well has higher costs because they have to constantly, come up with different products that require different materials. It's more costly. So it's a pretty good strategy in the sense of you can sell apparel which has a higher margin and you can sell at a higher price while you take those profits and develop those footwear products. So it's pretty good. Now, to me, I think that their strategy is working because it's undeniable that their sales are growing. But the stock is in a bad sector, right? At the moment, there's no much interest out there in retail stocks, and rightly so, because even though we see Nike beating, the University of Michigan consumer sentiment has not been very good lately. So this leaves us in a position where, okay, the stock was at 30, now it's in the low 20s. What can happen getting into the earnings? Well, the company is opening a number of new stores: London, Paris, Miami, Portland, Austin, Chicago. At the moment, they have 25, but they expect to open 50 only in the US by 2025. All right. So we have an opportunity here for earnings surprise upside and entering a good price. Probably, at current levels, maybe even lower, and exit maybe in the high 20s. So it's a good move over there. Are we fighting the trend? Yes. But I think this kind of company earnings are when you can see them as a gap up. Again, we saw that here, right? We saw that right here. So I can't see a reason why, if the earnings are positive, or maybe even just align with the expectations, which they have reaffirmed several times, I can see why this can happen. So I'll put a structure to this, which is buy 20 contracts, 24 November 25 strike calls at 150 and sell 20 10th of November $25 calls at 70 cents. So that's a net spend of $1,600 for a maximum return of $4,900. So that's about 3 times return with a short expiry at 28. Hope that's useful. Hope you enjoyed it. Thank you very much and see you next time.